Hi everyone. Today we are going to be discussing the principles of technical analysis. This will be a very short video, but it's very important for us to know the principles of technical analysis because it will help us to know what we are doing. It will help us to know the rationale behind the decision we are taking. There are three basic principles of technical analysis. And the first one is market discounts everything. So market discounts everything. Mm. So what do we mean when we say market discounts everything? Market discount, COU, everything. By market disc, by that we mean that technical analysis focuses solely on price action. All relevant information from news, data, political events, trader psychology, supply and demand, name them. They are already reflecting in the current market price. And that is why you see, I earlier mentioned in our introductory course on technical analysis that you will find out that because of technical analysis, sometimes you will have a negative data, and despite that, you will find that price will be going up, trending up. For instance, assuming you have a negative data, a negative news release that should cause Canadian dollar to fall, and the price is in the trend line. Instead of seeing Canadian dollar fall, you will find out that it will start continuing to rise despite the fact that the news was not favorable to Canadian dollars. So that is the power of technical analysis. So one of the basic principles is that price is everything. You focus solely on price action. Then the other one is that history tends to repeat itself. That is the second principle of technical analysis. History tends to repeat itself. So patterns and trends in price movement often repeat due to human psychology and market dynamics. This forms the basis for future price prediction. And we have, let's see if we can see any explanation using, okay, the explanation now is the formation of M pattern. Most times, if you see M pattern in the market, it's a form of reversal. Like here, I will be expecting market to reverse here because I'm seeing a kind of pattern, and this pattern is well known in the market. I'm seeing M formation, I'm seeing harmonics, formation of harmonic pattern also. So I'm expecting the pattern to play out. So if the pattern is to play out, that means price will fall in this 2024. Price CADJPY will fall up to this area by the end of this year or next year. So with technical analysis, we can comfortably say that price of this uh, pair will continue to fall from this year and equally next year. With technical analysis, we can tell you that if price breaks this area, if there is a strong breakout in this area, that price will continue to be bullish this year. So that is, history tends to repeat itself. These patterns are patterns that are common in the market. Let me see if we can see any other. So this one is trend line. The trend line is equally a repeatable pattern. Once you see a trend line, know that price most of the time will respect the trend line. If you see here, you will see a trend line. And most times, if you come to a particular time of the year, you will see that the market will be performing in the same way. You can do mapping. Most people do what we call mapping. They will just check the pattern they are getting in a certain period of the year, then map it to another area where such pattern is occurring, and they use it to predict the market. So this is just one of the basic principles of technical analysis. Then the other one, which is the last one, is that price moves in trend. That is the third principle. Price moves in trend. So price tend to move in trends. It could be upward trends, downward trends, or sideways trends. Identifying and following these trends is very important for the success of every trader. There is the saying that trend is your friend, so follow the trend. Like in this pair euro card, you can see I've already um I'm trying to follow the trend. I've drawn the trend line, so I'm waiting for price to tap this place the second time, the third time. So for it to tap, it may take almost 2 3 months for it to tap here. And once it taps here, this area, the next thing is that price will fall because of the trend. The trend is downward. So you see, I'm able to predict that price is bullish, and that price, there is possibility that price will come up to this trend line. And because of that principle, that price moves in trends, the next thing that will come to my mind when price reaches this area is that price is going to start falling. So it is equally obtainable in different time frames, but when you are trading, make sure you are trading in accordance to the higher time frame. You can see that the principle still applies here. In the weekly time frame, it is in up we have upward trend as shown from the in the trend line. So we are expecting that price will come up to this side, to this area. And when price comes to this area, we will now If it doesn't break this area strongly, we will be expecting price to come down to this area. And also, if it doesn't break this area, there may be stop hunting by market makers in this area to remove those stops here. If it occurs, after it occurs, price will continue to go up. So you see, with these principles, you are able to know the rationale behind technical analysis, why you are taking decisions and why you need to take those decisions. You are not just trading blindly. So with that, we will come to the end of this subtopic on technical analysis. In the next um, module, we are going to be discussing price action details and chart patterns, common chart patterns that we are expected to know as technical analysts. These chart patterns, when you see them, you will be able to make predictions of where price will go next. Thank you. So if you have any question, feel free to ask it in the comment below. Feel free to like, subscribe, and share this video with your friends and loved ones as we work towards becoming unconscious, competent professional traders who will be receiving steady bank alerts from trading. Thank you.